Okay traders, welcome back to the Price Action Labs YouTube channel. So in this video we're going to be going over an NQ or a New York session trading strategy, right, that you can take. So what we're going to be going over, we're going to be going over the daily bias and how to form a daily bias correctly. We're going to be going over fair value gaps, choosing the right fair value gaps and validating all of them with the bid and the ask. So the bid and the ask give you two very important fundamentals, right? They give you who is aggressive and who is passive, right? So understanding how to read buyers and sellers at key levels is probably the main reason you're struggling to find a consistent strike rate and a consistent edge. So using candlesticks alone are great, but the problem with candlesticks is that they don't tell you the entire story. So with that being said, if you could learn a strategy that only relies on buyers and sellers inside of certain New York trading fair value gaps, right? Think about what that would do to your strike rate and your psychology. So with that being said, let's dive into it. So we are going to go through this as a trader, right? So here we have NASDAQ on the 15-minute chart over here, and we have the 5-minute chart on the NASDAQ over here, right? So if we just kind of go over this, right? So this chart may look confusing to people who are new to my content or who don't perhaps know how I trade, right? So the way I trade is very simple. So I look for a fair value gap on the 5-minute or the 15-minute time frame. So a lot of traders trade with fair value gaps, they trade with order blocks, but they don't know what's going on inside of order blocks. They don't know what's going on inside of fair value gaps. So here we have a fair value gap, right? But before we go into that, I want traders to basically understand what I'm looking for on the ATAS platform. We're going to choose a random piece of price action. So we're going to go through this, this little up move before the down move over here, right? So what do I want traders to understand, right? So before we go and dive in completely into the candles, I want you to understand that price action alone will not tell you who is in control between the buyers and the sellers, right? Price action via the candles are a pictorial visualization of what has happened with the real price action. So what do I mean by the real price action? Real price action refers to the bid and the ask and the interaction between the buyers and the sellers. So as we can see here, we have a green candle and we have a red candle. We have a green candle. So what you can see over here is you can see some additional colors over here without even going into the numbers, right? So what we can understand, if we kind of dive into this candle in a little bit more detail, what we can understand is that we have a lot of blue rectangles here, blue rectangles, a dark blue rectangle here, and we have a dark blue rectangle here. So what does this mean in terms of the price action? So I want traders to really understand this in terms of a simple way of looking at it is I want traders to see on the left hand side is what we call the bid, right? On the right hand side, this is the ask. This is what we call the ask. So we have the bid and the ask. So the market isn't an algorithm or a bot or anything like that, right? It's not institutions and banks. It is essentially an auction between the buyers and the sellers. And if you can read the auction between the buyers and the sellers, you can have a much higher strike rate and a much higher success trading ICT concepts as a whole. So what's going on over here, right? What's interesting is that this was, if we just go back to regular candlestick for a moment, this is the ATAS platform. We can see this was the high of the London session, and then of course the New York session gave us a break of structure, and we're going to be entering, or we're going to be seeing the price action in this particular region. But just to give traders some context about the high of the London session, going back to the price action we're looking at, there's only two numbers you need to read price successfully, right? The bid and the ask. So let's see what happened in this rejection. What I want traders to understand is that there's two types of participants in the market. You have aggressive participants and you have passive participants. And so I want traders to understand, this is very basic knowledge. We're going to go over it very quickly and then we're going to apply it with ICT concepts. So on the left hand side, you have the bid. On the right hand side, you have the ask. So here we see 0 for 3, 0 for 4, and then 1 for 17, right? We also see 6 for 35. So when you see a blue over here, this represents the delta. So a blue delta or a positive delta means that there's more aggressive buyers than aggressive sellers, right? Notice how I'm saying the word aggressive twice, right? Because the bid represents the aggressive sellers and the ask represents the aggressive buyers. And so if we kind of dive into this candle a little bit more, let's look at this numbers here, right? 6 for 35. So what this represents is that there's 35 market participants going in and buying contracts. So this is the ES. They're going in and buying contracts. Sorry, NASDAQ. They're going in and buying contracts at around 21 233. So you know that there's more aggressive buyers hitting the ask. 35 contracts going in on the ask side, looking to be aggressively buying the market, looking to drive price higher. This is why we have a positive delta. So from here, once we have a positive delta, right, when the market moves down, despite having a positive delta, what this shows us is that in this region, even though buyers were aggressive, we see more aggressive buyers and sellers. What this is actually telling us is that sellers are passive in this region. So when we see a lot of aggressive buyers and the market moves down, what this is telling us is that buyers are struggling to actually move price up. And so this is where the word passive comes in, or passive participants come in. When you have aggressive buyers, but the market fails to move up, this means that sellers are in control. Why? Because they're passive sellers that are propping up. So for basic knowledge, I want traders to understand that passive sellers move the market down, passive buyers move the market up, right? So now when we go back to our regular candlestick chart over on TradingView, on TradingView, we're going to be going over the basics in terms of ICT concepts. And so to give you a quick summary of ICT, the way I'm looking at this is, of course, I always start with the Asian session range. This here is the Asian session range, right? And what I want traders to understand is that the Asian range low was swept over here, right? So this is what we call an Asian range low sweep. I'm just going to write ARL. And so when we see an Asian range low sweep, this for me is added confirmation that the market wants to go higher, right? I'm only confident in taking buys when the Asian range low has been swept, right? Don't take my word for this. I want traders to go and backtest. I want traders to burn into their brain the importance of the Asian range, right? Because experience is something I can't transfer to you in a video. It's something you're going to have to go and study yourself, right? So the Asian range low is one of the best liquidity sweeps you can take in the entire market. Now, with that being said, right, this is now the Asian range low, and this is now what we call an ICT Judah swing, right? Judah swing is basically the low of the day. So you're looking for an ICT Judah swing below the Asian range low. This gives you confirmation that you should be taking buys. Okay, this is just one confirmation, right? So now when we go back and replay price, what I typically look for is a fair value gap mixed in with the PO3. And this is where I go to the 5-minute chart, right? So this is now the 4-hour power of 3 indicator. Let me make sure. Yep, 4-hour power of 3. When I'm intraday trading on the 5-minute or the 1-minute, I will typically use the 4-hour power of 3, right? So if we go to indicators, my Asian range is by Rob Minty. And if you just type in power of 3, you can use any one of these. I use the power of 3 by 2 degrees, so this one. So I use the power of 3 by 2 degrees, the best indicator out there. You can use any indicator out there that really gives you what you're looking for. In fact, you don't even need an indicator. You can just draw a line at 10 a.m. Eastern at the price at 10 a.m. Eastern open, right? This is what you're looking for. And so to give you some context, we've had a sweep of the Asian range low, and price here has now given us a fair value gap, right? So we can see price has left a fair value gap just over here, right? So this line and this line will represent the fair value gap. And so this is typically what I'm looking for in the markets, right? I want to see price doing this, right? So if we just kind of extend this out a little bit, let's say we have a key level over here. Some traders call it support, some traders call it an order block or a POI or a fair value gap, right? All these words are interchangeable. If you have a bullish fair value gap, right? Let's say you have a bullish fair value gap, you want to buy at the fair value gap, right? What are you looking for that actually gives you the confidence, right? Is it a sweep of liquidity? Well, we've already had a sweep of liquidity down here, right? The Asian range has already been swept. And so when price comes into a fair value gap like this, there's only two numbers you need. And this is what we're going to go through in a lot of detail. So the market can head down, and the market is eventually going to head up. It is your job to have the confidence to take trades inside of this region, right? So we are going to go through exactly how you can see who is in control between buyers and sellers so you can confidently take buy and sell trades. So we are going to go over this, right? And we're going to break down exactly how to trade fair value gaps using any ICT concept. Now, the truth is nobody understands that basically price action consists of buyers and sellers. So when we come into this fair value gap on the NASDAQ, right, this is the 5-minute time frame. Again, what makes an order block valid is that yes, we've broken structure, we've left a fair value gap, but you need to understand what is going on inside of the fair value gap. And there's two things, well, there's mainly three things I look for inside of the fair value gap. gap. So we're going to be studying the rejection over here. So this rejection candle is very interesting before we had the move to the upside. And so let me ask traders one thing, right? You want to be using the delta. So we're going to dive into this candle and understand the delta. So the one question I get, do I need to read every single number to read fair value gap successfully? Well, the answer is no, you don't, right? And the reason why is simply because you can see over here a very, very large, the A-test platform makes it very easy for you to see. We can see here a very, very clear red delta, a massive red delta. But when we go and actually read the candles for educational purposes, we can see 230 for 50. 230 for 50, right? 230 market participants hitting the bid, right? 230 that were going in as aggressive sellers. Only 50 buyers. Aggressive buyers. So a lot of traders here will make the mistake and say, oh, there's more sellers than buyers, right? That is incorrect. There's more aggressive sellers than there are aggressive buyers. And so what does that mean, right? So if price comes down and we see a huge amount of selling over here, right? We see a huge amount of selling in this region, but the market breaks higher. Right, the market can break higher, the market can break lower, bearing in mind this is going to be our key level, right? So our key level kind of is within this region and price is staying within this region, right? So these two lines represent the region. Now let me ask traders this question. If you see a lot of aggressive sellers inside of this region, now what does that tell you about the region? Right, if I just continue to play price on, again, we're studying the exact price action you saw just over here in this region. Now, if you can see a huge amount of aggressive sellers in this region over here, this wick, and if we go back to the A-test platform, it is without a doubt this wick over here. If you see lots of aggressive sellers, but the market fails to break below the level, it means that these sellers have failed, right? This is what we call an absorption process. And so the way that bullish fair value gaps work is you're looking for an absorption process, right? So the absorption process itself will take place in and around the fair value gap. And so when you have a bullish fair value gap, right, you don't want to be looking at things like breaks of structure and liquidity sweeps and all these things, right? What you want to be understanding fundamentally is that there is an absorption of sellers in this region and also in the surrounding regions as well, right? The markets can either move up, the markets can either move down. And so it's your job to understand whether price is going to do that, right? So when you see a lot of aggressive sellers, right? Aggressive sellers in this region were trapped. They were trapped, and we know that because the market broke higher, right? To give you some more context of this particular trade, right, we also had a retest into the level. Now, what made the retest very interesting for me as maybe a second entry or even good to understand, this here was a green candle, right? The green candle obviously is a bullish candle. We were breaking above the zone, right? We had tested and broken above the zone. But when you look at the retest itself, right, it is very possible to have aggressive sellers inside of a green candle. And this is the fundamental difference between failing ICT traders and profitable price action traders, right? They understand the difference between candles and how to read the candles using the buyers and sellers. So when we go into here one more time, let's go through a quick case study and understand how NASDAQ was behaving, right? This was the fair value gap, NASDAQ round about 21,202, and so we see a ton of red delta over here. We see red delta, which means there's more aggressive sellers than buyers. These sellers have not been rewarded, the market breaks higher. This means that there's passive buyers propping up in this fair value gap, right? This fair value gap has been supported. And so when you're trading fair value gaps, what I want traders to understand is you're looking for an area of absorption, right? So when you come into a bullish fair value gap, right, what you're really looking for is you're looking for sellers in this region to fail, right? These sellers are trying to drive price down, 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 but the market breaks higher. This gives you a lot of added confirmation, and it's really the correct way to trade key levels. And so if we break this down one more time, on the candlestick charts directly, right, what we can see is over here is we can see a large kind of rejection over here coming, this, which what it means is that it validates the fair value gap, right? It validates the fair value gap. So one other thing I want to go through is a finished auction. So when you see price coming into a fair value gap, you want to see a finished auction, right? So fair value gap that's below the 10 a.m. Eastern and a finished auction will give you basically everything you need to take a successful trade. And so if we look over here, we see a lot of aggressive sellers, but what's even more interesting when we dive into the price action is that we see a zero at the bottom. Now, a zero at the bottom, I want traders to kind of understand this as being the auction has finished, right? The auction has been wiped out. So this basically means that buyers and sellers have agreed that this is a fair price, right? So this was priced 21,166 and a half roughly, so 21,166, 167 area. When you see a 0 on one side, that means in this case the ask, so the total number of aggressive buyers coming in, was 0. That means buyers and sellers have agreed that this is a fair price, right? So as a trader, you want to go in and think, when I see a 0, the auction is finished, which therefore increases the likelihood of a reversal. So you know the market's going to reverse off this area. I believe the same happened over here where we had another finished auction, right? So we see finished auctions as well as aggressive sellers failing. So this shows us the market is willing to reverse off this fair value gap and the sellers are failing. So therefore, the only logical thing you should be taking is buys, right? So you could have taken a buy within this particular fair value gap or order block anywhere around here. Stop loss, where do I place my stop loss? Good question. So I always like to place my stop loss essentially where that finished auction has occurred, right? Always place your stop loss where the finished auction has occurred. So in this case, the finished auction or the lowest finished auction was really down here. So you can place your stop loss in and around this long wick, right? This is a protected wick. Why is it protected wick? We saw a finished auction, right? So you can place a nice entry just over here, and you basically want to be targeting high of day, right? High of day. Simple as that, right? So 1 to 2 risk reward, 1 to 3, 1 to 2, something like that, right? So you want to be trading in line with the finished auctions and you want to be buying below the 10 a.m. Eastern. So it's the same kind of ICT principles that everyone's familiar with, that everyone's aware of, but it's just combining it with order flow, right? So for me, the order flow was essentially the edge. That was the missing thing in my trading, right? So if you're someone out there who's struggling with psychology, just take a look at your edge and ask yourself, what can I do to improve my edge, right? Not change my system or change my strategy, but what can I add? What's the missing piece in your trading, right? What is it that you're not seeing? Is it a liquidity sweep? Is it a breaker structure? Is it a fair value gap, right? These are all concepts that are regurgitating in everyone's brain, right? But if you can add order flow to your trading, I promise you, it can definitely make you profitable because it's the missing piece that will take you from reading regular candles to actually reading price action successfully. And so on that note, if you like this video, give it a like, give it a thumbs up. Let me know what other videos you want to see. Let me know what other videos you want me to go over, and I'll be more than happy to go over order flow or higher time frame analysis on order flow on any market that you want. Gold, Bitcoin, Forex, futures. Any market you want, just drop a comment and I'll happily get back to you.